morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, here we are entering the third full week of October, and the equity markets are still correcting. However, it is possible that last Wednesday we might have seen the bottom, at least a temporary bottom for a while. And if you recall, last Wednesday the volume picked up, equity markets really spiked low, and then they reversed up to the upside. So the S&P, we saw the S&P drop to about 1820, and we're looking for a support level right about that 1815 level, and it bounced off there and had some pretty good follow-throughs on Thursday and Friday. Same thing on the NASDAQ. NASDAQ dropped to 4131, bounced off there, and had some pretty good follow-through on Thursday and Friday. Now, the reason it looks like that may be a possible bottom is sentiments hit extremes, and we measure this by looking at the CBOE put-to-call ratio, spiked well above 1. It was at 1.4 levels, 1.2 levels in those periods of days. Also, we saw the same thing on the VIX, the inverted VIX structure, meaning the near-term VIX over the 3-month out VIX inverted, and that was well over 1, also spiking up to some pretty high levels there. And also we saw the volume increase. That was the heaviest volume we've seen. The volume's been building up, so it almost gave you that feeling that there's capitulation and selling going on. And also we saw the treasury yields crash, just pretty much crash well below 2, and of course they rebounded over the next few days. So now what we're looking for is, again, is the follow-through day. And the reason, what the importance of the follow-through day is, and that occurs anywhere from day 4 through day 10 after an attempted rally. So Wednesday would be day 1, day 2 would be Thursday, day 3 would be Friday, and of course today would be day 1. So anywhere in these next few days where we can see a big volume, big rally and big volume on the NASDAQ or S&P, which tells us that institutions are once again interested in gobbling up shares. Now, the reason we wait for that 4th day is we want to make sure that the rallies we saw Thursday and Friday just weren't a reaction to an oversold condition, which you'll often see. Now, I pretty much expect us to whipsaw back and forth until we can get some decisive moves on the S&P above the 1900 to 1906 level. That's right where its 200-day moving averages. So for now, that area would be resistance. Same thing on the NASDAQ. We're looking at the NASDAQ can get over to 4300, 4302 level. That again is its 200-day moving averages. And if these indexes can get above those levels and stay up there for a few days, that may indeed tell us too that perhaps the market did bottom and will continue into a good rally by the end of the year. So no reason to rush into it, but it is the time to start building watch lists of quality stocks. And again, look for stocks that are having good strength or have recovered above their 50-day moving average. And we again continue to see the strength in the medical sector, more specifically the biotech stocks, the drug stocks, some of the hospital stocks, some of the contract manufacturer that work for drug companies involved in clinical trials. Those companies are doing very well also. And outside of that sector, we still see a lot of strength in the trucking and rail industries. And the retail sector, the strongest industry groups appear to be restaurants. And those are usually the fast casual type of restaurants. So you might want to start, keeping a watch list at all those groups. Some of the internet stocks are also doing very well. And, look for that follow-through day. Be patient here. Typically when the markets sell off so bad, we're going to get a little whipsaw back and forth. That's to be normal, and we'll see how it goes. Seasonally, we're entering the strongest period of the year, so we'll see if that works as well. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor, and good luck trading.